Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Thursday, August 5th. Let's get through the three topics: what's moving markets most, what we're paying attention to, and an update as to what Blanke Schein Wealth Management has been up to lately. So thanks for watching. Well, first out of the gate, let me recap. In the last 5 weeks, I've been on the road. That's why my daily or weekly updates haven't been as consistent as we'd like them to be. Rob, why are you on the road? Well, I'm visiting with clients. Yesterday we almost hit 123 degrees. We only hit 122, 123 here in the desert would have been a record. So that's why I'm out and about. Last 5 weeks, I've been everywhere from Santa Monica, San Francisco, San Diego, Santa Barbara, San Francisco again. That one's for my daughter up there, taking her back to college. Wisconsin, got back at 9:30 last night from Wisconsin, was there for 48 hours, saw 5 clients there, and actually took in a baseball game. It was not the outcome that we wanted to see when we were there, the Brewers game, but it was a lot of fun nonetheless, and it was great to see those clients face to face. So we have upcoming Orange County, Las Vegas, and San Francisco again, and a few others, and this is just the last 5 weeks. That's 30 plus clients on a face-to-face review, if you will, whether it's at their home, at their place of business, breakfast, lunch, and dinner, you name it. And we've even had some fun at the ballpark. But if I was in your area, your neck of the woods, and we didn't quite connect, please reach out to me and my team, and we're happy to set something up again, because it's still 120 degrees here, so we're looking for an excuse to get out of here. But that being said, that's what we do. And we have plus clients all over, not only just the United States, but all over the world. I've done Zoom calls with clients, again, as far as Croatia this summer. And so anywhere you are, we're going to connect with you and make an effort to do so, because it's very important to stay connected, as there's a lot of volatility and the uncertainty of this world, an ever-changing world. That being said, we did 45 plus in person-to-person meeting, or even Zoom meetings, or even phone conferences. So we're constantly working here in this last 4 or 5 weeks here, and we got a full schedule, even more so on the weeks to come. So we're going to be reaching out to you, and we're happy to do so we can connect and basically set the table for, one, a review for the first 6 months if we haven't done that yet, but 2, set the table for what we expect on the weeks and months ahead. And I'm telling you, there's going to be a lot of fun stuff that's going to come our way by way of policy and what Congress is working on right now, or even just what the markets are potentially going to do. But we're watching right now what the corporations are doing. If you're looking at earnings right now, again, the markets hit all-time highs once again. That's because they are just smashing expectations. The real question is, on a go-forward basis, what do we expect? What are we going to pay attention to? So let's go through those right now. As I just mentioned, most of our clients, if you will, are not in California. They're in most tax advantageous states. So we stay ahead of what Congress is delivering. Again, Congress just delivered the 2,700 page, and believe me, we're going through it. Our research teams are going through it. I'm personally going through it as much as I possibly can. There's a lot of airplane time, if you will, and I'm going through this. And right now, as it stands, there is obviously the energy and renewable sort of sector is going to get a big, healthy lift, right? The White House and the initiative of 2030, if you will, sort of 50% of the cars on market are going to be energy independent, if you will. They're also going to say, hey, wait a minute, are they going to raise our taxes right now in this bill? Well, there's a high probability the answer is yes. There's well over 60% betting odds. Not that you can bet on something like this, but that's actually how Wall Street actually weighs this. But the reality is that yes, it's going to be $1 trillion huge spending package, and they're going to have to basically figure out budget reconciliation, how to sort of smooth it out. So they're going after the energy that's non-clean energy right now. So who's going to win? Well, right now at Blanke Schein Wealth Management, we're taking advantage of that for our clients. And we're going to say, hey, wait a minute, on the renewable energy side, the energy efficiency, the ESG sort of play, even on exchange traded funds, or even companies, who are those going to be the big winners? Because you can't fight the dollars that are going to be spent over the next few years. Now, how are they going to pay for it? Well, yes, maybe it's not this year in terms of higher taxes at a corporate tax rate, or even the highest earners on an individual level, but next year we most definitely think, unless things change, we definitely will see higher taxes. Now, markets, again, are pricing that in. They're forward looking, so they're going to be okay with higher taxes if they don't get too crazy crazy. Right now, we see it around the 28% rate on the corporate tax, plus or minus. Again, there's a lot of horse trading, there's a lot of sort of negotiation, and so don't hold your breath on this one. We could see something after Labor Day, but this year that could change it for next year on a go-forward basis. We don't see a retroactive sort of 2021 tax bill, tax change in the law. If they did, that would be a major issue for the equity markets today and every small business owner, if you will. So we really don't think that's going to play out. Now, is the worst still ahead? Well, and that's actually referring to COVID-19 variant right now. And even the doctors say there's multiple variants beyond that. Again, stay healthy, stay safe, do what you need to do to keep you, your family, you and yours really out of the way of this pandemic, if you will. That being said, markets, again, are looking through. So as I used this example a couple weeks back, if you really wanted to find out what the markets thought, again, the equity market sort of acted up, volatility got a little crazy, but then they settled down because a report came out in Europe, specifically England, who has been a month ahead of us with regards to the variant, with regards to the virus itself. If you look at the curve, it goes up and then it comes back down. Now they're on the back end slope of that ski slope as we're incline right now, and we're growing cases rapidly. We have followed that pattern, if you will. The up, as fast as it goes up, it comes down really quickly. Again, there's no predictability here. We don't know, but science is pretty predictable in some of those viral patterns. At least they have year to date in the last 2 years that we've seen. So the markets are looking at England and sort of seeing that it does come down, and it comes down rapidly once it hits a peak. When and where will the peak be? We don't know. And what will be the ultimate impact? Well, here's the net impact. One thing is for certain is that it's going to put the Federal Reserve on pause. So they're going to have to help provide assistance to the marketplace, to those individuals that need it, businesses, so on and so forth, and basically keeping their accommodative policy more dovish longer in place, the longer that this persists. So it's sort of a catch-22. We want this to go away. We want to get back to our normal life. We want all of this, reopen America, reopen the world. But the longer this persists, the more certainty that the Federal Reserve will be there to help this unknown. And that's the underpinning of what the market's looking at, as well as you don't get all of the front end loaded this last quarter of earnings, right? Everything was sort of a surging ahead. There's a lot of supply chain constraints right now. But again, companies have beaten expectations by well over 80% on average of the S&P 500, which is tremendous, right? You don't see something like that. We haven't seen that in like 3 or 4 decades, if you will. That being said, that also means it's going to lump through and push forward some additional sort of injection of growth down the road, because everyone's not going to come out right now, because everyone's going to play it safe because of restrictions, certain areas, certain states, because of COVID. So that's going to be a lumpy sort of earnings growth on a go-forward basis, but it's not going to just put it all in one quarter and sort of stack it. So that's actually the advantage to the market. Another reason why the market is seeing through the variant noise and saying, wait a minute, there's sort of going to be lumpiness of growth and pockets of growth if companies and corporate executives can sort of execute properly, given all the supply strains and constraints. Also, we have, again, another bill that's going to go through, 1 or 2, that's going to provide a stimulus on a go-forward basis, and we're going to see it in different variants of or variations of the economy. And again, when they spend or pass a bill into law and then say, hey, we're going to do sort of what we believe is important, again, energy renewal as an example for this year, but we had healthcare in years past and so on and so forth. It doesn't happen spending doesn't happen all in one calendar year. So you could see it basically chopped up over the course of 5 or 10 years. And that's ultimately, out of the 2,700 page bill, what we're waiting to see when and how. And that's a balancing act from taxes that they'll pull in to when they'll do the spending, so that as much as possible it could be revenue neutral. We know it won't be, but that being said, that's sort of the negotiation and the sausage making behind the scenes of what's happening in Washington. Once we get the final, we can then say, hey, wait a minute, and position our clients' portfolios and their investments to opportunities ahead, long not only for today, but long into the future. Again, the final word I'll leave you with right now is we're paying attention to the 10-year Treasury, as we've done all year, and it tested yesterday it tested the 112 level that it did earlier this year. and that's a sort of maybe a bottom. One time when markets sort of hit sort of that level on a downside, they have to have a double test, if you will, and they just did that. So now we're at 122 as we record this for the 10-year Treasury, which is also a positive sign. That means that rates aren't going to drop precipitously. That means if they did, that would be trouble for future growth ahead. So we pay attention to the 10-year Treasury for indication just as that. So a positive thing just played out in the bond market as way as the 10-year Treasury today. So again, all in all, that's the recap as we see things. Again, we're here available for reviews. We're here available to, when it's safe and right, we'll go travel and meet you where you need to be. Because again, most of our clients aren't here, especially in the summertime. So thanks again for watching. We're looking forward to connecting with you. Our team here at Blanke, Schein Wealth Management is here to serve you in all of your needs. And again, if you like this, like and subscribe and share to friends and family. Take care and have a great day.